Welcome back to The Exchanger. I'm your host, Ben, and in today's video, Elon and the Tesla team drop bomb after bomb after bomb in the Q2 earnings call. And not just relating to Tesla, you're going to get a small piece of NVIDIA action in there as well. First, we're going to be taking a look at the car business bombs, and then we're going to get into the AI bombs, which are absolutely mind-boggling. The implications of what Elon had to say in this earnings call were huge. They will blow the car business out of the water. So let's get into the first clip from the call.
In Q2, we achieved record vehicle production and deliveries and record revenue of about $25 billion in a single quarter. And Model Y became the best-selling vehicle of any kind globally in Q1, surpassing the likes of Corolla and Golf. So it was the number one vehicle of any kind, including vehicles that are sell at a far lower price. This is, I think, an incredible achievement by the Tesla team, and just a huge thank you to our customers for their support.
Getting started, Model Y became the best-selling vehicle globally in Q1 2023. Not just battery EV, not hybrid EV, nothing. Best-selling vehicle globally. Now, this isn't just proof for insane demand for Model Y. It's proof that demand for Tesla's next-gen vehicle will be absolutely parabolic. Let's think about it. The Tesla Model Y is a $50,000 vehicle. It just surpassed the Toyota Corolla to become the best-selling vehicle globally. The Toyota Corolla is roughly half the price of Model Y, ranging anywhere from $23,000 plus or minus $1,000 to $30,000. You have to remember when talking about vehicles that a linear decrease in cost leads to an exponential increase in affordability. So when a price comparable Tesla comes out, the next gen Tesla, the demand will be absolutely off the charts. The total addressable market for the Toyota Corolla is so much larger than that of the Tesla Model Y, and yet the Tesla Model Y is still the best-selling vehicle globally in the first quarter. That is huge. The demand for the next-gen vehicle will be so big that you will need the James Webb telescope to see the bottom of the wait list. It is going to be mind-blowing. The wait is going to be quite incredible when that thing comes out. Next, Elon said this about Q3 production.
Probably a slight decrease in production in Q3 for sort of global factory upgrades.
As you just heard, Tesla and the team are working on global factory upgrades, which is clearly indicative of a demand problem. Anyways, this is also probably indicative of a Model 3 refresh coming in Q4 2023, but that's pretty much speculative. However, this is also backed up by Elon stating that they are allowing one-time FSD transfers, kind of pulling a demand lever there to unload Model 3 inventory, in my opinion. That's it for the bombs relating to Tesla's vehicle business. Now let's get on to the huge bombs, the AI bombs, because this is where institutional investors get a little bit tripped up. And you need to remember that as a retail investor, opportunities in the stock market lie between what you think and what the institutional investors think. So you got to take advantage of those. That being said, the next clip is the most important segment from the entire earnings call. I cut out all the ands, ums, so's, and buts from Elon so that it was a little bit more, pleasant for you to watch. But make sure you listen really closely to what Elon had to say.
With respect to Autopilot and Dojo, in order to build autonomy, we also need to train our neural net with data from millions of vehicles. The more, this has been proven over and over again, the more training data you have, the better the results. There are times where we see in a neural net, at 1 million training examples, it barely works. At 2 million, it slightly works. At 3 million, it's like, wow, okay, we're seeing something. But then you get to like 10 million training examples. It's like, it becomes incredible. There's just no substitute for a massive amount of data. And obviously Tesla has more vehicles on the road that are collecting this data than all of the companies combined by, I think, maybe even an order of magnitude. I think we might have 90% of all, or a very big number. Success in AI endeavors is a function of talent, sort of unique data, and computing resources. And we have outstanding capabilities in all three arenas.
All right, the three most important words uttered in this entire earnings call were talent, data, and compute. Let me explain, because I've been talking about this off YouTube for years. I've only just gotten started on YouTube. But here we go, because this is where Tesla becomes truly untouchable. Listen closely. First, relating to talent, Tesla and SpaceX get to cherry pick the top engineers in the world because that's where everybody wants to work. Roll the clip.
He wasn't willing to leave Apple if it was just Tesla, but he was willing to do it if it was Tesla and SpaceX. So sometimes you get the best talent in the world. That's the kind of thing, you need to do. And that actually has been very beneficial to Tesla.
Second, relating to data, Tesla has by far more data than any other company combined. Obviously, Elon said that they think they have more data than all of the other companies combined. And finally, Elon said this about Tesla's goal of having 100 exaflops of compute by the end of next year. This is pretty solid validation for any NVIDIA investors like myself.
We'll actually take the NVIDIA hardware as fast as NVIDIA will deliver it to us. Tremendous respect for Jensen and NVIDIA. They've done an incredible job. And frankly, I don't know, if they could deliver us enough GPUs, we might not need Dojo, but they can't.
To wrap up all the technical aspects of FSD that were in the earnings call, the winner of the race to solve autonomy will be the company that has the correct and scalable approach. It's very important that it's scalable because Tesla's competitors don't really have a scalable approach. It will be the company that has the most talent, it will be the company that has the most data, and it will be the company that has the most compute.
And we have outstanding capabilities in all three arenas.
Now let's get on to the bomb that everybody seems to be talking about, licensing FSD. Roll the clip.
We are very open to licensing our full self-driving software and hardware to other car companies. We are already in discussions with early discussions with a major OEM about using the Tesla FSD.
Once again, Tesla and the team are in early talks with a legacy OEM about licensing FSD. Let me know which one you think it is in the comments, but it seems to be the consensus on good old Twitter that it's either Ford or Mercedes. But honestly, I don't really care who the hell it is. Let's just think about the implications real quick. Let's say it was Ford who Elon was talking about for the sake of this example. Ford sells 1.8 million new vehicles each year. Let's say that in a super conservative case, only 20% opted for FSD. At the end of 2 years, Tesla will have gained 720,000 new FSD subscribers, which translates to $1.7 billion in revenue added basically straight to their bottom line because it's software as a service. The implications of FSD economically are mind-bogglingly huge, to the tune of multiple trillions of dollars. One last thing Elon was asked about at the end of the earnings call was how Tesla is managing geopolitical risks. And this is a very, very valid question for any short-sighted investor. But I'm a long-sighted investor, so let me explain to you why Tesla is financially bulletproof in the long run. Tesla has $23.1 billion in cash equivalents, and investments. If the Chinese Communist Party hypothetically kicked Tesla out of China, they'd suffer huge production loss as well as a slight decrease in vehicle margins in the short term. But Tesla has so much cash equivalents, and investments that they could just start building factories elsewhere. So while they'd suffer a huge hit to production as well as profit margins in the short term, it wouldn't really matter for them in the long term because they have so much cash on hand. Just huge amounts of cash, just piles. It's crazy. In another hypothetical situation, if by some higher power Tesla was forced to shut down production of their factories globally, they could not only continue their current factory expenses, they could continue the research expenses and still come out of the year fine and well on cash. In short, it is laughable that there are analysts that believe that Tesla will be demand constrained anytime soon. Between Cybertruck, where demand is so far off the hook you can't even see the hook, and the next gen vehicle, which demand will be so long you'll need the James Webb telescope to see, this ain't happening. In addition, the impact of FSD economically will be so frickin' huge to the tune of multiple trillions of dollars, like I said earlier. And finally, we'll keep this between me and you, the folks who stuck around, Tesla does not have a competitor that is working on a scalable solution to FSD that has the data, talent, and compute to actually solve the problem. That's it for today's video. As always, if you learned something new or gained a new insight, make sure to like and subscribe. And as always, The Exchanger signing off. Peace!